Hey, what's happening, everybody? It's the Silver Fox here. Welcome to the Fox Den. And no, I'm not an angel. We just don't have any blinds in this room, and it's super bright. So if this channel pops off, maybe we can buy some blinds for you. Let me know in the comments what you think about it. Let me start off with my first YouTube channel video, and the current news is going to be the Silicon Valley Bank. And how that's pertinent is the FDIC on Friday has just taken them over. And so what that means is the Federal Deposit Insurance Corp is now basically holding the bag for all the money that's been entrusted to that bank. And so I did some research. Um, what I knew was kind of outdated, but basically, according to their website, the FDIC covers both checkings and savings for each individual account up to $250,000. And so that's a lot of money, but I'm also under the impression that every bank is not covered by the FDIC. So, not financial advice, but if you want to know, I'd probably call up your bank and see what accounts are covered or not. And so, a little background on Silicon Valley Bank. They're the 18th biggest bank in the United States. They have about $200 billion worth of assets, and they're highly aligned in the tech sector. And so you might think, hey, that's great. It's not going to affect me. I don't work for the tech sector and I don't have a bank under them. And that may be true, but it's going to ultimately affect all of us. And so that's why I think it's such an important story to report on. And so, how this all started happening was that cryptocurrency exchange FTX went under and then affected Silvergate, and now Silvergate has turned over to Silicon Valley Bank. And basically, what happened was Silicon Valley asked for some cash to be raised to come into the black or the green, and that sent investors fleeing. And about 2 years ago, I saw that their stock was about $700 a share, which is a lot. And now it's worth just a hair above $100. So they've decreased. Not good at math. Was that 700%? Never went to school for math. Wasn't good at math. So we'll see. We'll see what I can do here doing finances. But quick math, that's 700%. So that's a lot of money. And so, like I was saying, the FDIC has now taken over this bank on Friday, and there's no money in or no money coming in and no money coming out. And so you may think, hey, how does this affect me? And there's a couple different points. So, one, if you're getting paid by this bank, you didn't get any paychecks on Friday. So, possibly you're going to miss your credit card payments, you're going to miss your mortgage, your car payment. And so that's going to continue getting kicked down the line. There's tech firms that rely on paying people, other people besides employees, like material costs, that kind of thing, through that bank. There's companies that ask for loans through them, and there's also bank to bank lending. And that's just another way that they make money besides the fractional reserve currency, which basically means if you go into a bank and put in $1 on their papers, they have technically $10 of imaginary money that they can basically do anything with. And that's my understanding. I don't know 100%, like it's 90%, but it's kind of roughly around there. And that's how our whole banking system works, is fractional reserve currency. And so with all this happening, banks are going to trust each other. It's going to be harder to get credit. It's going to be harder to get a low interest rate. And you have to remember that the Federal Reserve has seen job numbers increase. And me personally, I don't think that it's like great jobs. I think it's second and third jobs, excuse me, that are part time. And so, that being said, Powell wants to decrease job numbers. He's made that clear in his statements. And so, not only are banks going to stop lending to each other, which is going to make it harder to get credit, the Fed Reserve is also going to be raising rates. And ironically enough, they made an emergency announcement on the Fed Reserve website that Monday at around 11:30 they're going to have an emergency meeting, and those minutes don't have to be recorded or discussed upon. It's a closed meeting. So whatever happens happens, but if I had to guess, they're probably going to be trying to quail this down and not make it turn into another Lehman Brothers Bear Stearns moment in 2008. And if you remember, in 2008, I was only in high school, but I remember things being similar: high gas, $4 a gallon, groceries being expensive, kids in school, their parents were getting laid off, construction workers, that kind of thing. And I couldn't even find a job. I remember applying for jobs in high school and nobody would hire me. And I remember that job market being so tough. And I can definitely relate to any of the younger generation, Gen Z, millennials, that kind of thing, with always grinding, always trying to get to the next dollar. And so it just kind of throws caution in the wind, a red flag, that maybe this is all coming over again. And if you look in, I'll kind of talk about this more later, but if you look at every financial crisis, 2000.com, where all the stock market and websites basically crashed, the world financial crisis, where the Lehman Brothers were highly invested in mortgage-backed securities, and that's basically a giant basket of a bunch of people's mortgages, and in theory, it's supposed to be safe because I don't know how many mortgages you have in there, but it's mixed with a bunch of people's mortgages, and if they want to live in their house, they're going to pay those. And so the expectation is that that's a safe investment, and obviously we saw it wasn't. And so now we're kind of coming into another 10-year cycle, which is kind of long overdue, but the past couple years, I'm not going to really talk about that for the reasons of I think you get docked in views if you say certain things on here. But the last couple of years, if you know what I'm saying, hasn't been a normal market cycle or a normal market, and money's just been kind of handed out. So we're probably due for something to happen, and that's why I just kind of want to put this out there and tell people, hey, be careful with your money. Live below your means, live at your means. Don't be taking out no crazy loans right now. And if you got any thoughts or opinions on what I've been talking about, leave them in the comment section down below. Let me know if I can improve anything. It's my first video, so you gotta go easy on me. Come on. Just trying to help people out. But just want to say hi to Mom, Dad, hello. You probably never thought you would see me on here, and I never thought I'd be on here either. And I'd just like to thank my beautiful wife, Mrs. Silver Fox, for doing my clip art for my channel page. And if you thought that was good, contact us. Maybe she can do yours too. So just want to say again, this isn't financial advice. Just kind of throwing out current events here. And do me a favor, live below your means, and we'll talk to you soon. Take care. Bye.